My topic for today is the difference between AMT and AMTI. AMT stands for Alternative Minimum Tax and AMTI stands for Alternative Minimum Taxable Income. Education builds a nation and education builds your reputation. Therefore, focus on education. This is Nashima, the CEO of InfoTaxCard.com. I suggest professionals and students sign up with Climb to enhance their knowledge. I also request that those who watch our videos subscribe to our channel to receive up-to-date taxation information in their email. Why should you subscribe to our channel? We are a team of CPAs and EAs who develop content based on Congress IRC section and IRS publication. Let me start today's topic, which is about alternative minimum tax versus alternative minimum taxable income. We are going to cover in this topic what elements make up the alternative minimum tax, what elements constitute the alternative minimum taxable income, what are the components of AMT adjustment and preferences items. Some examples I will share with you about the preferences, AMT preference item and AMT adjustment include. And lastly, I will explain AMTI calculation with an example. So I'm going to start with what elements make up the alternative minimum tax. Number one, if your AMT is more than your regular liability, you will be charged an extra tax. Number two, by disallowing certain deductions and credit, high income earners are able to pay minimum level of tax. Number three, the alternative minimum tax system is similar to regular tax system and entails taxpayers calculating their taxes using different definition and rates. If the tentative minimum tax calculated under AMT exceeds the regular tax, taxpayer must pay the higher amount, ensuring high income earners pay a minimum level of tax regardless of deduction or credits under the regular system. Next, what elements constitute the alternative minimum taxable income? Number one, to calculate your AMT, this is the income figure. Start by calculating your basic taxable income, then adjust or add back specific items such as state tax deduction, interest, and different depreciation method. Number two, once the calculation is done, you subtract the alternative minimum tax exemption to determine the income that is subject to AMT rate. Number three, AMTI. AMTI is the key to determine whether you will owe AMT. The AMT is a tax that may result in you paying. What are the components? What are the components of alternative minimum adjustments and preference items? Income items that fall under AMT preference are treated differently for both regular tax and AMT purposes. Ordinary taxable income excluded preference items, but they are included in AMTI. When computing AMTI, the addition of AMT preference items is made to taxable income. If tax preference items are more than a specific percentage of a taxpayer income, they will be added back to taxable income, which will result in a higher overall tax rate. Certain tax items are subject to different treatments for AMT than regular taxable income. To properly adjust for AMT, the taxpayer can either add or subtract these amounts from their regular tax income. Here are some examples of AMT preference includes. Number one, depletion in excess of basis. Number two, interest on private activity bond. Number three, 7% of the gain on sale of qualified small business stock. Number four, excess intangible drilling costs. Some examples of AMT adjustment include number one, state and local taxes, which is also known as SALT, can be deducted through itemized deduction. If taxpayer deduct them for regular tax purposes, they cannot be used to calculate AMTI, so they must be added back for AMTI. Number two, to calculate AMTI, the standard deduction cannot be used, so if a taxpayer uses it for regular tax purposes, they must add it back. Number three, the bargain element of incentive stock option needs to be included in AMTI during the exercise date. To calculate AMTI, it is necessary to add the difference between AMT allowable depreciation and depreciation taken for regular tax purposes. Now I'm going to explain it with an example. As a single taxpayer, Candra's regular taxable income $92,000. Correctly deducting $10,000 from state and local taxes was accomplished by her itemized deduction. The sale of Section 1202 qualified small business stock issued in 2014 resulted in gain $171,429 being excluded by her. In the end, she excluded the exercise of incentive stock option from her gross income. Utilizing this option, she paid $5,200 for stock valued at $22,000. What is the AMTI of Canada, or what is the alternative minimum taxable income of Canada? So we have to see what items she has to include. What she paid for itemized deduction. She paid for she took the exclusion of 1202 gain. She also took the exclusion for bargain element on ISO exercise. Now let's start with the itemized deduction. To determine an alternative minimum taxable income, what items must be added back? Number one, is AMTI determined by adding back itemized or standard deduction? Solved. Now we have to find out whether a standard deduction, itemized deduction has to be added back or not. AMTI can result in changes in both itemized and standard deduction. In order to calculate AMTI, you must include certain itemized deductions that are not deductible for AMT purposes, like state and local taxes, medical expenses, and miscellaneous deductions. Standard deductions are not permitted in the AMT calculation. The AMT or alternative minimum tax rules require adjustment to be made whether you took the standard deduction or not. Therefore, the Canada itemized deduction of $10,000 from state and local taxes must be added back to AMTI to determine AMT. Now let's find out the second item, which is Section 1202 qualified small business stock. To calculate AMT, do we have to reinstate Section 1202 of the qualified small stock gain exclusion in AMTI? When calculating AMT, it is necessary to add back the gain excluded under Section 1202 for qualified small business stock. This ensures that the exclusion does not negatively affect the taxable income under the AMT system. The objective is to maintain a fair minimum tax level and ensure that wealthy taxpayers pay their fair share. For AMT purpose, 7% of gain excluded under Section 1202 is added back as preference items. This means that while you can exclude up to 100% of the gain on qualified small business stock for regular tax purposes, 7% that excluded gain will be included in your AMTI. The last item. So, therefore, $12,000 must be added back to AMTI to calculate AMT, which is $12,000, the 7% of $171,429. The last item is ISO exercise. Is adding the bargain element to the ISO exercise necessary to establish AMTI? The bargain element on exercise of incentive stock option is the difference between the fair market value of the stock on the exercise date and the exercise price you paid for stock. The immediate paper gain you experience when you exercise your option is essentially what it is. To determine AMTI, the bargain element from the ISO incentive stock option is re-added. There are two types of stock: incentive stock options and non-qualified stock option. Generally, the employers offer to their employees so that they can stay longer. So to determine AMTI, the bargain element from the ISO exercise is re-added. The adjustment ensures that the potential profit from a stock option is included in your AMT calculation regardless of whether it is immediately recognized for regular tax purposes. If your AMTI increases significantly, this can potentially lead to an AMT liability. liability. Now let's conclude. So Kendra's income, regular taxable income was $92,000. She has to add back itemized SALT deduction $10,000, which is the combination of state and local taxes. She also has to add back 7% of Section 1202, which is $12,000. Which is $12,000, 7% of $171,429. Last item, bargain element on ISO has to be added back $16,800, which is the combination of 20 second, which is the combination of example. Yes, which is the combination of $22,000 minus $5,200. So, Kendra's AMTI alternative minimum tax is $130,800. So, $92,000 plus $10,000 itemized SALT deduction, 7% of Section 1202 gain $12,000 plus bargain element on ISO exercise $16,800. When we'll add all these items, the result will be $130,800. I thank you so much and God bless you.